If you're wanting to engage with those types of groups, you need to make sure that your business is able to not only absorb that amount of capital and achieve substantial milestones, whether it's, technical achievements, customer acquisition, revenue generation, but also that there's a clear path to generate a return on that investment, because their expectations are going to be that this, within sort of 2 to 4 years, is a multi-billion-dollar company.
Welcome to Cleantech Forward, a foresight podcast where we explore clean tech customers, capital, and Canada's path to net zero. Tune in to learn more about Canada's most exciting clean tech startups, industry success stories, investor insights, and academic initiatives as we accelerate the growth and impact of clean tech together.
Welcome to Cleantech Forward. I'm Jeanette Jackson, CEO of Foresight Canada. Today, our panel of leading clean tech investors are back to hear a pitch from Martje van der Sande, the CEO of Circular Rubber Technologies. Martje delivers her pitch for CRT to carbonNEXT director Jason Switzer, Evok Innovations Marty Reed, and Sarah Applebaum of Pangea Ventures. The investors evaluate her pitch, offer some feedback, and answer Martje's questions around securing investment. This Cleantech Forward podcast is supported by Gowling WLG. A global leader in intellectual property law, Gowling WLG works alongside Canadian cleantech companies to develop IP strategies that maximize business opportunities and increase market share while protecting valuable innovation. From idea to investment to international expansion, Gowling WLG understands the potential of your intellectual property at every stage of growth. Visit gowlingwlg.com/cleantech to learn how they can support your business today.
Welcome back. It's terrific to be back again with you, Marty and Sarah. I'm Jason Switzer. I'm the director of carbonNEXT, supporting the next generation of CCUS solutions.
Yeah, great to be back, Jason. I'm Marty Reed, partner here at Evok Innovations early stage venture, and excited to be joined again by a good friend and peer of mine, a partner at Pangea.
Yeah, thanks for inviting me. Happy to be here. For those who don't know Pangea Ventures, we are a hard tech venture fund investing in commercial stage companies that help move the needle on big global challenges relating to climate change, food and water security, and healthcare.
Awesome to be back with you guys. And we've got another fantastic startup joining us shortly. I've been thinking a lot about this, the global tire problem. I mean, we've all seen and experienced, the huge fires when tires burn. One thing I didn't realize is that, roughly 3% of global waste is tires, and that it's become a huge issue as well. In terms of microplastics in the ocean, microplastics in all of us, really. And so knowing that there's a company out there in Canada trying to solve this problem is tremendous. And so I think that kind of sets the context for our invitation to our fantastic startup CEO, Maartje van der Sande, CEO at Circular Rubber Technologies. They recently won Angels for Climate Solutions in Vancouver, one of Foresight's activities with Vancouver Economic Commission. Really great to have you here. It was very competitive, I'm sure. And so welcome, Maartje.
Well, thanks, Jason, for the introduction. And I'm very excited to be on this podcast and looking forward to the discussion. Thanks for having me.
Well, why don't we kick things off? Do you want to just give us a bit of an introduction to yourself and to Circular Rubber Technologies?
For sure. Yeah. So Circular Rubber Technologies was founded back in 2019. And it's really around turning the world's waste streams into value. So we are on a mission to accelerate and increase the use of reclaimed rubber in high-grade applications. And we strive to become the global leading rubber reclaim producer by the end of 2027. It's maybe hard to imagine, but around 100,000 of end-of-life mining tires are stored in mine sites every year. And they're not only causing operational challenges or form safety risks, like you mentioned in the introductions, but they also are a huge liability to the mining companies. And this is happening while roughly 20 million tons of rubber is used annually to make new tires. And interesting to know that rubber from end-of-life tires that are being recycled, they hardly find their way back into high-grade applications. So CRT, At CRT, we've developed a technology to actually fix this, and we convert the rubber in these end-of-life industrial tires into a product that substitutes this virgin rubber material during the manufacturing processes. The question then is, how does that work? Well, CRT provides mining companies with a traceable and a full service solution to one of their largest waste streams. We solve a liability and the mining companies pay us to pick up their tires. Now, we've overcome the logistical challenges of these remote sites by planning our facilities close to the waste streams. And after we shred these large mining tires into crumb rubber, it is the input our process. Our proprietary process converts the rubber crumb into what we call a natural rubber reclaimed product. Tire manufacturers are our customers, and we provide them with a high quality alternative to virgin rubber. And by buying our product, they can actually meet their sustainability goals, reduce greenhouse gas emissions, and increase their percentage of circular material use, and all while decreasing their overall manufacturing costs. Now, the global rubber market, and it was mentioned in the introduction, it's huge. It's a $64 billion market, of which 70% is actually going towards the tire manufacturing industry. And maybe even more interesting to know is the fact that the rubber reclaim market is growing at a 12% year on year, if we compare it to a 2% year on year growth for virgin rubber. So there is an increased demand for this reclaimed material. With our clean process that is not using any chemicals or additives, and the product that we have, our reclaim, has excellent properties, we actually provide a suitable and a viable alternative to virgin rubber. Now, the combination of the physical properties of our product, the anticipated global supply, and the clean process, it allows us to grow in the market and also help tire manufacturers to substitute more and more virgin rubber. Now, we are an impact business, and there's no doubt about that. And the bigger we grow, the bigger the impact we can make. So as a team, we are focused on doing the right thing. We're looking into becoming a B Corp company. We're looking at obtaining FSC recycled certificates, and we are in the process of doing impact calculations. But I think most importantly, and to give you an idea about the impact that we are making, is that for every mining tire that we put through our process, we roughly generate a revenue of around $3,000, and we reduce 9 tons of CO2 emissions, which is roughly the equivalent of 450 trees growing for 1 year. Over the last 2 years, we've proven our concept, de-risked our technology, and produced several tons of our product, the rubber reclaim. And earlier this year, we converted these end-of-life mining tires into a rubber reclaim at full commercial scale, and we fully de-risked our technology. Now, we've extensively tested the product, both in-house as well as through collaboration with industry partners and with university. And we have established relationship with several tier 1 tire manufacturers. We've also pre-sold and sold all of our product that we've produced. And the first purchase orders are actually in hand, and the product is about to be shipped. Now, we are on track to have our first plant operational in 2023. And then afterwards, we plan to scale globally and have global operation and provide reclaim on each continent by 2027. Now, obviously, I can't do that alone. We have a great team. CRT is a Vancouver-based startup, and our team consists of several seasoned individuals. Now, it's small, but it's mighty, and it has decades of combined experience in the rubber recycling, capital project management, logistics, and also venture-backed scale-ups. Now, we plan on strengthening the team over the next months in the field of project and plant management for our first location. And I think also good maybe to mention that I've mentioned it earlier on, but we really plan to have global operation and provide our product on each continent with around 8 plants over the next 5 years. So this will roughly generate anticipated revenue of about $120 million with a gross margin of 26% and an EBITDA estimate of 20%, just to give you an idea about the scale. We are actually currently raising. We're doing a 7 million Canadian equity raise over the next months to get our first plant in West Canada up and running. Now, the key use of the funds that we're currently raising is really the design and the construction of this first plant. And in addition to the equity part, we are looking and raising several forms of non-dilutive funding. At this moment, we're having discussions, but we are looking at a lead investor who is, for us, it's important to have somebody who's really aligned on values and wants to help CRT grow to its full potential. And by doing so, really unlocking and accelerating the associated impact. So I think to all investors out there, hop on the wagon and let's jointly make the future a bit more circular.
Great, Maartje. Thank you so much for the introduction. I think, it was quite comprehensive, preempted a lot of the questions that I had, but, maybe one to kick things off is if I'm, one of your customers, so pick any global tire company, if I'm buying your recycled rubber material, is this a drop-in additive or material for me? Do I need to add any additional additives to make my formulated tire product? And what % of my end product will be recycled versus virgin rubber?
Great question, Sarah. So yes, you can drop it in immediately. So there's no need to change any chemical composition or change your raw material. What you do need to do is adjust your recipe. It's almost like baking a cake. So it's more the percentage of each ingredient will need to be adjusted slightly, but there's no other ingredients required. In terms of how much reclaim can be used, that really depends on the application. So, for example, if we look at the tread of a tire, that can contain a larger percentage of reclaim, or if it's a lower grade tire, the percentage of reclaimed material can go up to 30-50%, depending on the application. If the specifications are very stringent and very high, the percentage will be lower.
Can you touch quickly on just kind of the logistics? I'm trying to understand kind of the full LCA on this life cycle analysis. Sorry, but most mine sites are fairly remote. I'm going to assume most tire manufacturing these days is done in Asia. Talk to me about just sort of how your materials flow. In related, sort of what are the key contracts or relationships do you need to have? It sounds like it's both with the mining company and with the sort of tire manufacturer. Are there others in there in that supply chain? But help me understand that whole picture.
Well, and maybe related, sorry to jump in, is how do you deal with sort of the logistics and size? I mean, mining tires as mining vehicles are absolutely massive. A wheel can be, 10 feet tall in some cases. So how does that work?
Absolutely. They're huge. They can have a diameter indeed of 4 meters and they might weigh up to 4 tons. So key for us is to actually be located. Our plant is located relatively close to the feedstock. Now, Marty, to your point, if we look at the North American market, most tires are actually being made in the US. Like all major tire manufacturers have their factories there. And currently that's actually a challenge because the virgin rubber, natural rubber, is coming from Asia. Yeah, it's a challenge to get that. 95% of virgin natural rubber is being grown in Asia, and that is being transported to factories in North America. So for them to have a stream of raw material that is actually originating out of the same continent is a bonus. And it also is a decrease in overall carbon emission if you start to look at transportation. Now, to the first point, because I think that is important, we first need to get that feedstock, these mining tires, to our facility. It depends on the locations. Every jurisdiction has its own legislation. Some of these tires already find their way back to tire recycling companies. So this can be done either through backhaul operation or dedicated trucks. What we've done for Plant 1, we said we want to focus our efforts really on where we add the most value, which is our proprietary process. Before we can put a 4-meter diameter tire in our process, it needs to be broken down into smaller pieces. Now, there are tire recycling companies that can do that. So we have partnered with a North American leader in this field, and we're working with them to locate our facility close to them, and they will do the shredding part for our first plant. In terms of LCA, what we've done is we've looked at the full chain of custody. So basically, what we've done a comparison. How does our material compare to, for example, virgin rubber? Because that's ultimately what we want to substitute. So what we've taken in consideration is all these different transportation steps. So picking it up at the mine, transporting it by truck. There's roughly 8 tires on a truck. Sarah, to your point. So it's not a whole lot, but in tonnage, it's still significant to the facility where it will be shredded and made in our material. And then once we've produced our material, we can ship it in containers, ideally via train or road, truck to the end customer.
Talk to me the sort of the scalability and sort of the venture side of things, because generally we are looking for, sort of strong intellectual property based companies that we think can then scale rapidly. And this feels a bit like a project by project type company. We'll set up one here and then one here and here, which can be a little more challenging. Just help me understand the economics and what feedback you've gotten from venture investors so far on that.
Yeah, and you're absolutely right. So we're sort of in this gray area between the typical project finance and the VC. So our IP really lays in the know-how of our process, our ability to scale. Let me backtrack. So we want to scale because that's when we make the biggest impact. Now, each and every plant is economical, feasible on its own. That's not our ambition. We want to provide these tire manufacturers who are all global companies and all have global operation with a security of supply and a continuous supply of high quality material. So therefore we say, we know our process, we know the feedstock, we want to scale globally in strategically located positions close to mining agglomeration. So for example, we're looking at Western Canada, we're looking at Eastern Canada, looking at the US, Utah area, Australia, for example, is an interesting one. So really targeting those strategic locations and do it fast. We believe that the demand, and I think I mentioned that the demand for reclaim is increasing rapidly. And especially if we then start to look at incoming legislation in terms of extended responsibility for mining tires, like the use of those tires that the mining companies actually need to make sure that they are being recycled. And on the other hand, the mandates that are being put in place on circular economy or around circular economy in terms of percentage of reused material, all that together in the coming years, we believe that will accelerate the demand even further.
And just building on Marty's question around scalability, why the initial focus on mining tires as opposed to like long haul trucks, fleet vehicles, or other use cases where you aren't dealing with these remote applications?
Yeah, so that is actually an interesting one. A tire is not a tire, and that might sound strange, but the quality and the chemical composition of each tire is significantly different. So if you look at your passenger tire, for example, on the lower spectrum, there's a lot of synthetic rubber additives and other chemicals being used. If you look at mining tires, the percentage A of rubber polymers is significantly higher than any passenger tires. And then out of those rubber polymers, it's really the natural rubber polymers. The percentage of natural rubber that is used to make such a tire it's extremely high. That ultimately is reflected in the quality of our product. So if we look at the physical properties of our product, they are high. So they're the highest in the market today. You will not be able to achieve that if you use a passenger tire, for example, as a feedstock. There are adjacent markets that we're looking at that also have a high quality rubber. So for example, the aviation tires, those are very high grade tires with a lot of natural rubber polymers in them too.
And maybe you can talk about your venture raise, going back to that, maybe something that also Sarah and I could help with. Just the intersection of venture capital and industrial tires is probably not a sort of common one. What's the makeup of the investor? What are you looking for? And, what are you hoping to get out of an investor?
So we've been having a discussion with several VCs, and what we are looking for is really somebody who sees the long-term picture that we see. So really is there with us to work with us, help us grow, and ideally has a network that can either help us on the mining side or on the customer side. So tire manufacturers, mining companies, some of their partners. I think that would be great. For us, it's also important to be aligned on values. We founded this company, and me personally, I'm really passionate about the impact that we're making. So it will be hard for us to give up some of the beliefs that we have. So, for example, right now we're in transitioning to becoming a B Corp company. That is something that we value and we find important. So we are looking for investors that share that belief and are willing to not just look at the financial return, but look at a broader return on their investment.
Yeah, I think that's so great. The impact piece is so important and a great way for you to sort of embody your own personal core values into the company and find like-minded people to work with. And, we've found, with our portfolio, impact is really a great proxy for the scale of the financial opportunity, especially when the technology solution is one that is, commercially relevant and economically viable. So, I commend you for, putting that core value sort of at the forefront. I know, Jason, we have time for one more question, and I might actually switch gears a little bit from the fundraise. And I'd like to hear a little bit more, Maartje, about the origins of the company and the technology. Is this something that you developed sort of internally with you and your team? Did you partner with an academic institution or local university? Tell us a little bit about that background.
Yeah, so it's actually an interesting story. So I don't have a chemical background. So I have an engineering background and my working career up to this point was in the oil and gas projects space. So when I left that industry to really focus on more renewable energy and circular economy projects, I met one of my co-founders and we got involved into not really a related project, but that had to do, we were looking at the rehabilitation of abandoned mine sites. Now, in that context, we had discussions with several mining companies, and that's when they raised the issue of these end-of-life tires. It was not something that I discovered on my own. I actually was not aware that this is such a huge problem and that all over the world, these tires are just being buried on the mine sites and are being left there. So in those discussions, this actually came to the forefront. I was like, wow, this is a huge problem. And there's so much value in that waste that is being buried. So I think that was the sort of like the initial incubation, so to say, of the company. And through the network, our third co-founder has a lot of experience. And then the three of us really started to look into what are the technologies out there? What can we do? And we started small. I think we had 500 kilograms, so not even one tire. We had that cramped and we put it through a smaller machine. And then from there, we really scaled up to the point where we are today. There we have proven that at a commercial scale machine, we're actually able to produce a product that is living up to the expectation of the tire manufacturers.
Marty, now is the time when we turn the table around and let you ask some questions of the investors. So, why don't you ask a few zingers of our terrific investors?
Sure. So I think the question that crossed my mind is, and interesting, Marty, maybe it links to the comment you made around project finance. So what do you think about the private equity firms that are starting to move towards the traditional VC territory, to call it that, because there seems to be a little bit of a shift that PE firms starting to or willing to come in earlier. Are they interfering with the typical VC space? So how do you see that as an investor, and what are your views on that?
Yeah, and maybe I'll start and then Sarah can chime in. I'm not seeing private equity kind of come in early stage on tech risk or where there is still tech risk necessarily, although certainly there's a blurring of kind of asset classes and letters of rounds and the like. But what I will say is there's been an emergence of firms. Generate was, I think, the first. Spring Lane is doing something similar where it is a bit of a hybrid, but essentially looks a bit like early stage project finance, which can be particularly useful also when each individual project isn't necessarily mega. Meaning if you're doing a $500 million project, you can get Department of Energy or equivalent funding to support it. But at smaller scale, solutions like Generate, I think are fantastic. I think you're asking the right question. And one thing maybe to circle back to your sort of description on the venture side, you've got to really be clear as to, sort of what are the primary motivations of the firm. And so, a corporate venture unit, certainly impact can be quite significant and important. But if a venture firm is managing LP capital, they have a fiduciary responsibility to deliver returns and a commitment and a sort of business model that ties to that. And so, not saying that impact isn't critically important. And to Sarah's point, they're obviously, we hope, correlated, meaning the more impact, the more successful it can be. But at the end of the day, we need to understand what that return profile could look like, which is within a traditional venture model anyways, can be a challenge.
And the other piece I think I'll add to that is, and you're absolutely right in your observation that you have these larger, later stage funds moving into the venture landscape like TPG, some of the sovereign wealth funds and others. And I'd caution you and any other entrepreneur who's listening to this podcast, because these funds have a large amount of capital that they need to deploy. They're not able to participate in sort of a single digit million financing round. They don't really get out of bed unless they can write a $20, $30, $40 million check or larger. And so if you're wanting to engage with those types of groups, you need to make sure that your business is able to not only absorb that amount of capital and achieve substantial milestones, whether it's technical achievements, customer acquisition, revenue generation, but also that there's a clear path to generate a return on that investment, because their expectations are going to be that this, within sort of 2 to 4 years, is a multi-billion-dollar company.
I was also wondering, with everything that's going on in the world, do you see any change in investor behavior now? The current global economic conditions are changing over the last months, even?
The short answer is it depends. It depends on the sector that you're operating in. There have been, definitely some softenings when it comes to the public markets. Technology stocks are down. The fervor and excitement around companies going public via SPACs is sort of eliminated. And so we're seeing, or at least, at Pangea, we're starting to see in some areas valuations start to moderate a little bit as the sort of go public trajectory is maybe slightly less attractive than it was 18 to 24 months ago. And so starting to think about how, valuations today need to level set with investor expectations for follow-on funding rounds and ultimate exit events.
I'd just add that certainly ESG remains a critically important component in a fairly hot sector. I think we will see a bit of leveling, although I think energy security is perhaps now a bigger buzzword or trend. And so I've not seen any cooling of that space, if you will. But again, we're in the venture early stage side, we are, not the leading indicator that maybe the stock market would be. And so I think it's a little premature to kind of predict what exactly that impact is. But again, on the energy security / energy transition side, still seems to be pretty strong. I'll say that.
Marty, I want to thank you. It was a tremendous pitch, and I think you posed some great questions that I think are going to give us some fodder for discussion for several episodes. Personally, I think your effort to try and tackle the challenge of these enormous tires is an incredibly worthwhile one. And although all circular economy startups really have to grapple with that logistics challenge of how you kind of link the supply to the sources of remanufacturing, I think you've come up with a really interesting way to approach that. So thank you for joining us.
Thanks for having me, Jason. And Marty and Sarah, thanks for all the great questions and insights on the current lay of the land in the investor world.
Thanks for listening. Don't forget to subscribe to the Cleantech Forward podcast and to share this episode and the others with your friends and colleagues. Join us next time for another episode on capital and investment, when Jordan McKenzie, CEO of Bioform, joins the investor panel to pitch his technology.
To learn more about Foresight's programs, events, and more, visit us at foresightcac.com or follow us on social at ForesightCAC.